All right, welcome back everyone to the Emerging Growth Conference. Please welcome our next presenter. We have Decibel Cannabis Company. Trades on the OTCQB under the symbol DBCCF and the TSX under the symbol DB, and is uncompromising in the process and craftsmanship needed to deliver the highest quality cannabis products and retail experiences. Please welcome Cody Church, Chairman and Interim CEO. We have Stuart Boucher, CFO, and Adam Coates, Chief Growth Officer. Welcome, gentlemen.
Thank you. Thank you very much.
All right, the floor is yours.
Excellent. Well, look, thank you so much for having us on. As I was introduced, I'm Cody Church. I'm the Interim CEO. And just to give it a little bit of background, I'm also the chairman of the board. I took over as interim CEO in about January of this year. Our previous CEO, Ben Z, who did a wonderful job, had a personal issue with a family member getting very sick. And so he had to step away. And I am holding the reins until we ultimately replace Ben. But we wish Ben all the best and really hope that he and his family are doing well. Just by way of introduction, Decibel is a combination of two companies, We Grow and Westleaf. So if you were a Westleaf shareholder, we ultimately renamed the business Decibel in, I guess, January of 2020. But what we are is the premium and ultra premium producer of craft cannabis. It's both in 2.0 and in flower and pre-roll. We believe we produce some of the best and, quite frankly, the most consistent cannabis in Canada. And our brand is Quest Reserve and Quest. That's just a bit of an overview. We're going to go to the next page. And I think, Stu, are you controlling the slides?
Yeah, I am.
Excellent. So if we get to the next page, you'll see that this is just a series of pictures of our product. We believe that the cannabis industry has to start with a great, great product. Our Quest product and our Quest Reserve are uncompromising in their quality. As you can see, some of the cultivars that we produce, Ex-Wife in the bottom middle is one of our great Quest brands. Point Break and Kush Mints are also what we call Quest Reserve, and Adam will go into some detail about what's the difference between Quest and Quest Reserve. But the two that we're very excited about, and this comes in June, is Stuffed French Toast up on the top left. That will be launched in June. It's a Quest brand. And then Sunset Mac is one of our extra special cultivars, a unique plant that we will launch in June as well. And it's a Quest Reserve. And we're so excited about those two new cultivars. And Adam will go through a little bit of our genetics strategy in a few pages. If we go to the key highlights, which is page 5, and I think this is where we really want to set the stage for what is Decibel and what do we stand for. It's all about the flower. We believe that it starts with a plant, it starts with the flower, and we want to produce the best quality possible. But we have, in our own estimation, a dominant market share in the premium sector. Premium we define as 20% over the average cost of cannabis. We certainly have some of the highest pricing in Canada, and we're very proud of that. And we've been consistently getting that highest price over the course of the last 18 months. We're also known, though, for concentrates. And so that's the really second step of the story, is that we have a premium concentrate line and a facility that produces those. So we do vapes and concentrates. We don't do gummies. We don't do beverages. We're focused on concentrates and vapes. And we have a premiumization strategy. In essence, we were a little bit slower getting into the vapes and concentrates kind of late 2020. And so we went into white space in what we would consider the value space, and ultimately are moving that up into premiumization, which Adam will talk about. Our growth has been extraordinary, and our growth is really buttressed by the fact that we have two drivers. We have flower and pre-roll, and we have the concentrates and vapes. Those two segments are going to create tremendous growth for us, and you'll see in the slides that we've grown the business dramatically and grown it profitably, which is really, really important. The next part is genetics. In essence, to be a premium craft business, you have to have three things. You have to have great genetics, you have to have people who know how to grow it, and you have to have the right facilities. But it starts with genetics. We have over 400 cultivars that are ours and exclusively ours. We have some of the most popular and, quite frankly, some of the most sought after genetics from California and Oregon. And we have a very, very extensive a variety where we can move to high THC, high terps, or a combination thereof. If you look at our performance, moving to expanding market share, we have continued to grow our market share in the last 6 months. Through great work by Adam and his team, we are continuing to be what we believe is the dominant player in the premium and ultra premium space. And we've also been very, very successful in the vape space, where we're number 3. I think the most important part, though, and this is what I'm probably the proudest of the most, is that the group of guys that are in this management team are entrepreneurial, they're extraordinarily hardworking, and they're focused on execution. We are a serious business that's focused on EBITDA and focused on profitability. And you'll see that from Stu when he goes through the numbers. We've had 2 consecutive quarters of profitable operations. And I'm very, very proud to say we will continue to be profitable forever. That is not an option. If we move to the next page, I'm going to turn this over to Adam. He is our Chief Growth Officer, but basically he's the man that sells the weed. And so if there's one guy who knows what it's all about in Canada, it's Adam. I'll turn it over to you.
Awesome. Thanks, Cody, and good morning to everybody. As Cody mentioned, my name is Adam Coates, and I lead up all the sales and marketing for Decibel. What we're looking at a page here is looking at the Q1 average pricing, across the Canadian recreational market. So you can see clearly here where Quest and Quest Reserve sit, just under $14 a gram for Quest, and this would be a retail sales price, and then Quest Reserve at $16.70. And we've got a number of our peers here from a brand perspective: Broken Coast from Afria, Citizen Stash from Experian, Black Market from G-Tech, and Simply Bear from Rubicon. So just to kind of give a sense of who our competition is and how we're looking at our brands. But what I think is really important here is to understand how we're getting this price and how we think we're going to be able to hang on to it. In Canadian recreational cannabis, there has been a significant decrease in downward pressure on flower pricing. And we've been one of the few companies who have been able to hold our pricing as well as, increase our sales velocity. And so, as you look at this, how we're really thinking about Quest and Quest Reserve, to put it into a different kind of product categories, thinking about it, almost like the Johnny Walker, of cannabis, where they've got their different levels. Our Quest Reserve being similar to like a Johnny Walker Blue or Green, and Quest kind of being that Johnny Walker Black, widely available, but for different occasions. You're going to purchase the product for different reasons. And one of the big parts of our strategy within, holding on to our price, ensuring we get great distribution, and ensuring the rate of sale really has to do with our customer service. On this board here, none of these brands actually represent their own products with their own sales team. We've doubled our sales force in the key markets in Canada, and really excel in customer service, education around our products and our cultivars. It was really important, as Cody mentioned, to be a preeminent premium craft producer. You have to have the genetics, and you need to be able to tell the story. And so we own that narrative in market to influence the most important people, at the point of connection with the consumer, which are bud tenders and the retail managers. And then finally, just kind of getting into the difference between Quest and Quest Reserve. Quest, you think about it as a little bit of your everyday indulgence. These are going to have genetics within this brand that are maybe, classics, not quite as hard, to find, but still rare in their own right. And really, it comes down to sort of the bud size, as well as, some other sort of bag appeal items, as you get into the actual product itself. Whereas Quest Reserve is truly something very, very special. Very hard to get genetics, very hard to grow genetics as well. And really kind of set into that really, indulgence and sort of rare, sort of special occasion type of product, and something that we're really proud of and we'll continue to see in the market. So as you go forward into the next slide, we talked about our pricing, but really where the torque in this business is going to come in our growth. So we've got a new facility called Thunderchild Cultivation that has just come online, and we've already recognized our first sales in Q1 of this. So we're going from just over 1,500 kilograms of output capacity on dried flower to about 7,300 for a grand total of about, between 8,800 and 9,000 kilograms of total output. And as you look at our pricing, our gross pricing of just over $10 on a blended average basis, there's quite a bit of growth in front of us. And really the exciting part for us is that we've never truly supplied or been able to come close to supplying the high demand for unique cultivars and really well-made craft cannabis. So diving into the genetics a little bit, we've talked a lot about it, and it is absolutely core to our strategy. To be able to maintain high price points, to keep having new news and excitement in the industry. Really the genetics are playing a huge part in the flower business, as well they'll play a part in the concentrate business as well. So we've got over 400 cultivars, and this really allows us to do a couple things. One, offer great choice and always have sort of new news coming, to consumers, retailers, and provincial boards that we need to sell into and our key stakeholders. But it also allows us to have a really great rotational product strategy where you have cultivars in market for a short period of time, really build up the excitement and demand, and then we're able to move on to something new and great to continue to, again, just have that new and great news. And really how we're looking at this is we're going to be a trendsetter and already have been a trendsetter, in the Canadian space. In 2019, we had ice cream cake and wedding cake, for example, come out, one of the cultivars of the year. We've moved on. And now here in 2020, we've got a number of, companies that are coming out with their own ice cream cake or wedding cake or Mac One. And so really how we're looking at this is offering amazing choice to consumers and really being the trendsetter and looking to as setting the bar in Canadian craft cannabis or in Canadian cannabis on genetics and quality. Moving into slide 9 here and just getting into concentrate. So we talked a lot about flower, but we really believe in the concentrate category as well. And first and foremost, for those, who know something about concentrate, you can't get a great concentrate without great input material. And so what we're able to do with our extracts is really highlight, those great quality and characteristics of our flower, and really use not only kind of price and product format and craftsmanship of the product, but also cultivars to help drive, the interest and engagement, and differentiation with our products in market. And so, the other beautiful thing about this is it creates optionality to manage our flower supply. And so we're able to control the supply of our flower to maintain our pricing, and we can redirect flower to create premium extracts and have really done well as we shared earlier. And then finally into our strategy. So Cody mentioned this briefly before, but really how we looked at concentrates as a massive white space in 2020 with really limited products available, terrible pricing from competitors, and really poor product quality. And so we entered the concentrate category at the lower end to help build trust as well as build volume with the consumers and retailers, and then building up into the premium format. So starting off with like a shatter, wax, really kind of simple cured products, and then moving up, into the live loose concentrates, the premium vapes. And as you can see, we've launched 22 products already in this category to date, and we're launching 30 more over the course of this year.
So getting into the results, in all 3 categories we compete in, we have significant market share. So we're the #1 premium flower brand in Canada with a 9% market share, #1 concentrate brand with a 21% market share, and #3 vape brand with a 9% market share as well. So all 3 of these categories are high growth. That's the key theme here. So in the premium flower side, we're seeing consumers migrate from the value segment where it's cheaper flower, but it's like grass clippings, into premium craft flower, recognizing that they can spend a little bit more to get a much superior experience. In the concentrate side, we like to look to the US market. So in a number of states that are legal, concentrates represent 10 to 15% of total cannabis sales. Within Canada, it's 3 to 4% right now. So that represents a tremendous growth over the next couple of years as this category expands, which we're going to participate in. And then similarly, vapes looking to the US is typically 15 to 20%. Here in Canada, as of today, it's about 13%. And so again, we're expecting this category to expand as the overall market grows. And so in concentrates and vapes, we expect to continue to grow our market share as we launch a premium concentrate and vape brand that's associated with our mainstay brand Quest, as we start to launch higher value add products, as Adam mentioned, through our premiumization strategy. And then on the flower side, being constrained by our supply when we have demand going unmet, We're excited to be bringing on that additional production through our Thunderchild facility and really see what we can capture in terms of total market share in the premium flower space. Moving on to our financials and where we think the business is going. So on the left-hand side, you can see our quarterly financials. So most recent quarter, we did $11.5 million of net revenue and $1.1 million of adjusted EBITDA. That does not include a single dollar contribution from our Thunderchild facility. It does not include any of our premium derivative products we're launching, nor our premium brand. So it represents tremendous growth relative to what we've been able to achieve to date, which we're extremely proud of. So we're one of the few Canadian licensed producers in the space that has generated positive adjusted EBITDA and done that consecutively in multiple periods. But all of our growth is left in our tank. So looking forward to 2021, bringing our Thunderchild facility online, producing all of that premium craft cannabis, and going from 1,500 kilograms of production to close to 9,000 is going to bring this company through a substantial growth curve. And then second catalyst being launch of new derivative products. So the concentrate and vapes that we're doing exceptionally well in to date, bringing new products to market. We have 30 additional products to bring in addition to the 22 that we currently sell today. And that's under a premium brand. So we're looking at higher priced products, better gross margin, and more defensible products that really bring forward the unique characteristics of flower. So moving over to the team slide, I'll pass it off to Cody.
Sure. Thanks, Stu. Appreciate that. I think any company is only as good as its people. And you just want to highlight a little bit about this team. It's an exceptional group of guys. But I think the top part is what really highlights this company is we have a very simple mantra. We grind, we craft, we care. Hardworking guys focused on craft quality and an organization that really cares about its reputation, its quality, and who we stand for. So you see Stu Boucher, investment banking background, CFO. Adam comes from the beer industry where he was knocking it out of the park and decided to make a leap into cannabis, which has been very, very fortunate for us and runs all sales and marketing. Chris is our operations guy, ran a number of retail stores before he came into cannabis, but very system oriented. Obviously, a little bit of a strange picture with Ed. He's our consultant grower, a long history of being an expert in the cannabis space. Doesn't like his picture being taken, so we just thought we'd show you his guns. Gary is from Afria. He is our compliance guy. It's very important to have experience dealing with Health Canada. Health Canada is a very complicated process, both in terms of the application and licensing, but then just the ongoing relationship. So we're extraordinarily lucky to have Gary. Derek is both covers off commercial issues along with people issues, and he's been a great addition to really help with culture. And then Warren is our product innovation specialist, but comes from the health and fitness space, owned a number of companies or owned a number of studios in the spin cycle side, but he's come and given us a tremendous amount of innovation, and that's where all of those new 2.0 product launches are. It's a great team. It's a group of guys who really dig hard, and I'm proud that that this is the team that's built the business to where it is. Moving on to assets, we'll turn it over to you, Stu.
Perfect. So we view our assets in three key verticals. So our flower production, our production of concentrates and vapes, and then really our consumer knowledge. So we have two cultivation facilities, one called the Quest Estate. So that is out in Creston, BC. And this is really the genesis of where Quest and the brand were created and where all of our craft flower comes out of. Recently, we got licensed our Thunderchild facility. So this is our second cultivation facility. And that's in the process of being operationalized right now. That's in Battleford, Saskatchewan. And it's both of those two facilities are indoor craft cultivation. So they're specifically designed, and we'll get into that in the next couple pages. Looking at concentrates and vapes, we have a facility that we like to call the Plant. This is in Calgary, Alberta. So it's in our hometown. And this is where all of the sales of our concentrates and vapes occur. It's a 60,000 square foot facility, 15,000 license. So we have a lot of optionality to continue to expand and grow into that space. And then lastly, we have 6 retail stores. And really, these bring cash flow, but more importantly, strategic value in a sense of consumer knowledge, helping us drive product innovation. And I'll speak more to that in the next page or so. So looking at our Quest estate first, so this is the Creston, BC facility. It's designed to produce about 1,800 kilograms of premium flower production. And so how do we achieve that? It's really through small grow rooms. So we have 10 grow rooms, about 1,000 square foot per room. And within each of those, they're extremely controlled in terms of environment, feeding, watering, and all those factors that shape and drive the quality of a plant. So we have very precise controls in place to do so, as well as the breadth of multiple grow rooms that allows us to create choice for consumers by planting unique cultivars per room rather than being stuck with one crop. So this facility is extremely ingrained within the Quest culture for us, and is really the genesis, again, of where we originated from. Moving on to our Thunderchild facility. So we're really proud with the licensing schedule and how it's been operationalized, that this picture is, in fact, a picture of our first crop. So this was our Mac 1 crop that we harvested a couple months ago. So this facility is really the growth wedge within our premium flower segment. So it has almost perfect alignment with our Creston facility in that it's small grow room, environmental controlled, and creates a lot of precision for our grow team so that they can dial in the quality of the flower. Our first crop tested at 26% THC, which as everyone knows is kind of the driver in the Canadian cannabis industry, where consumers are focused on THC as what they deem quality for the time being. And so that's been really critical in ensuring that we're able to maintain a quality standard that fits Quest, continues to drive the brand forward, and doesn't create any damage. So this facility is in the process of operationalizing. We're expecting it to get to full run rate by Q4, at which point we're producing run rate 9,000 kilograms of premium quality flower. Moving on to our concentrates and vapes. So this is out of the plant here in Calgary. So we have 29 concentrate and vape SKUs in market that come out of this facility. We recently launched 7 unique products in a live sugar format, as well as a live resin format, and then 1 additional distillate vape pen. So all of these launches have gone tremendously well, as you can see from our market share. And so this is really where our 2.0 strategy in Canada comes to light, coming out of this facility. So it's 15,000 square feet with another 45,000 square feet of space for development. And what we're doing within this space is creating a logistics hub. So this is going to cohabitate all of our processing and packaging for premium flower, and really benefit from economies of scale and being able to tap a larger labor pool. So we're really excited to bring that to the forefront, simplify our supply chain, but also get a great return on capital through this investment. And then moving on to the last bit of our asset portfolio, we have our 6 retail stores. So these are evenly split between Alberta and Saskatchewan, and they're branded under Prairie Records. So it's a bit of a boutique feel that allows for us to market brands despite some of the challenges that we face in Canada from a branding perspective and regulatory perspective. But these stores are not only a branding tool and a cash flow generator, but more importantly, they shape our product innovation. So it's a great outlet for us to reach the consumer, understand their preferences, what they are interested in, and what they want to see in the future. And that shapes our product pipeline. So what we've done to be successful within our product launches is actually launch smaller batch sizes within these stores. We're able to garner direct consumer feedback. So we have a 25,000 customer email list. And so we're able to get feedback on the products, make small tweaks, and then launch them nationwide so they're that much more successful. They get consumer traction, and it helps us achieve the market share that we've shown in the previous slides. So I'll pass it over to Cody, and he'll wrap things up with the board of directors and a bit of a summary.
Sure. Thanks, Stu. As you can see, there are 3 board members. I am chairman of the board, and obviously at this point, interim CEO. We have Mike Kelly, who's our chair of our audit committee. He's also the CFO of Step Energy, which is a fairly large oilfield service company here in Calgary. And then Paul Wilson is our chair of the governance committee, and he was the former CEO of Mark's Work Warehouse. It's a little odd to have 3 directors. I know that. We have 2 on the come. So Dr. Ivan Castleman and Billy Yellowhead will come on the board once they get their Health Canada security clearance, which we hope to be in the next few months. But Dr. Ivan Castleman has a long history and actually a doctorate in areas around and connected to cannabis, which is really quite special for us to have that kind of expertise. And Billy Yellowhead is a councilman on the Thunderchild First Nation. They are a large shareholder of Decibel, own probably about 5-6% of the company. And we're very, very happy to have him on the board as well. I'd highlight that between the board and management, if you went back into insider trading on our last open ability to buy shares, we were a major buyer of shares in the market about 2 weeks ago. We're big believers in the stock, and we're big believers in the story. And we certainly think that we have a substantial amount of growth through the course of the rest of the year. I would highlight that on May 27th, we will announce our first quarter results. Those first quarter results, I will highlight, do not include any material revenue from our Thunderchild facility, which is where we have substantial torque and substantial amount of volume coming in the second, and the third, and the fourth quarters. So when you look at our first quarter results, it does not give any credit to that incremental production. And I think everybody's going to be very impressed with our first quarter results as they come out. We're certainly happy to answer any questions. Very much appreciate the time that everybody's given us. We're excited about Decibel. We're excited about the premium and the ultra premium space in Canada. We think it's the place to be, and we certainly think that we are a leader in that marketplace.
Thank you, gentlemen. Great presentation. Yeah, we do have quite a few questions, and we're going to go over a few minutes, but these are important questions, so I want to get to them now, and the rest we'll email to you so you can answer on your own. Starting with, okay, so what is the biggest barrier you see in growth going forward?
So it's execution. We are moving from a relatively, I'd say a good commercial size of 1,500 kilograms to 7,000 and to 9,000. It's blocking and tackling. It's doing the job every day the same way and making sure that we execute. That's 100% of our risk. The demand is out there for the product.
Okay. And so are you going to need to raise money going forward? And if so, how much and in what form, equity or debt?
So we do not need to raise any further capital. We can self-finance out of cash flow all of our growth. However, we can accelerate our growth with a potential raise. And I think that will be really dependent upon the stock price and the interest in the market, but we do not need to raise incremental capital at this point.
Talk a little bit more about your growth rate for the next few quarters and maybe for the next 12 months. How do you see it?
So Stu, why don't you cover that off, because you've got a great sense for the numbers.
Sure. I think the two key drivers are really our Thunderchild facility and our 2.0 strategy. But just taking a step back to our fourth quarter, we generated $11.5 million in net revenue and $1.1 million in adjusted EBITDA. So we think with just achieving those numbers, that's solely with our Creston facility. So 1,500 kilograms of production. That's with 22 products in market. In a challenging market during COVID, and that's with a little bit of retail contribution, and then slice that in 4 for it just being our Q4. So our Q4 is really our baseline. And if you take that and extrapolate out, so we're bringing on an incremental 7,300 kilograms of premium flower. We achieve $8.60 per gram. So let me remind you that's 7.3 million grams that we're bringing online in production that we achieve $8.50 per gram on over the course of this year. And now we're not going to be able to go produce 9,000 in 2021. There's obviously a ramp to that facility. But looking over the course of the next few quarters, we'll be able to get to 5,000 to 6,000 kilograms of total production for the year, and then look to be run rate on that facility by Q4 or Q1. So that's kind of the first growth wedge. The second, we achieved 4.5 million in Q4 of derivative sales. So that's with 22 products in market in concentrates and vapes. Now we're bringing another 30 additional products into market over the course of this year. These are going to be more premium, higher quality, and focused on being strain specific. So this will continue to drive growth within our derivative segment of the business. And we're also going to participate from the overall market growing. Concentrates in particular represent a massive growth curve in the fact that they're 3 to 4% of the Canadian cannabis market today, and they should be north of 10% over the next few years.
So what percentage of your business is flower versus concentrate, and where do you see the larger growth?
So in the fourth quarter, we did about 4.5 million of concentrates. We did 3.6 million of retail sales, and then the remainder was flower sales. Now, as this business grows, we expect it to be slightly more skewed towards flower as that facility ramps up, and 40 to 45% of our total revenue will also be derivative sales. And I'm excluding retail from this just as we view it a little less core to our business and aren't investing in any growth avenues right now.
So what are your plans for reducing expenses to increase the bottom line for investors?
Stu?
So I think there's a few things. We've made tremendous inroads in the past year, and you can really see that by us generating positive adjusted EBITDA. We're one of 5 or 6 LPs within the space who's actually generated it. And so we've made substantial cost cutting to date. So I think from our 2019 results, we cut 5 to 6 million in SG&A spending, despite having a new facility online, our plant, and additional retail. So going forward, the game isn't as much about cutting SG&A as it is about optimizing and being more efficient within our facilities. And that's done through 2 things. That's through our processing and packaging, which we're putting in place a processing hub at our extraction facility here in Calgary, and that will cohabitate all of our processing and packaging needs for flower. And so what that does is it brings a sufficient labor pool. It allows us to bring in automation and packaging equipment that reduces labor requirements. And it also allows us to take some third-party services that we utilize to reduce our spending. So that's like an iotron machine for radiation to reduce microbials and other contents. And that could also include labeling and applications to the packaging. So that's number one. That's really important to us. Number 2 is improving our yields. So we're very fixated on driving high yields because it substantially reduces costs. We've made significant investment, and we've seen our yields increase by nearly 60% in the most recent quarter compared to the prior quarter because of some of these investments. And when your yields go up by 60%, it cuts all of your variable costs by nearly half. So those are the 2 key focuses for us right now. And we're going to continue to find operational efficiencies without impacting quality. That is the one thing we will not reduce spending on. We're going to maintain our quality so that we can continue to achieve price points as a premium product.
So do you see an increase in competition? And if so, do you see that affecting your margins?
Adam, why don't you take the whack at this one?
Yeah, for sure. So there's no question there's sort of more smaller craft producers coming to market in Canada. And we've seen sort of a proliferation of that. I came from the beer world, saw the same thing when I was with a big beer company. And I think the cannabis consumer is more inclined for craft cannabis and are going to make that jump earlier from some of the bigger brands. Where I think we have a great position is that we're going to be a craft producer that has unbelievable genetics that is constantly rotating. So we're not going to be sitting on the same genetic for a year or a year and a half and waiting for it to get stale, kind of always on the edge of that. And then we're also going to have the scale to supply the entire supply the entire country. So, I think some of these smaller craft producers, they'll do really well. And I think overall they're good for the business in terms of raising the profile of craft cannabis. But with our Thunderchild facility, as well as our genetics, we're going to be able to be sort of the leader in that space, through our supply, as well as our great genetics. And then, by virtue of building a really, nationwide recognized brand.
Fantastic. Last question. What regions are on your horizon as far as expansion goes?
So I'll jump in on that. We certainly think there's lots of opportunities. We're not in Quebec right now. A couple of Atlantic provinces, we're not there. We will be in Quebec by the end of the year. And we're focused on Canada. I know that there's lots of public companies in the space that have gone offshore and looked at international growth. We have the ability to move our profitability up by a quantum leap by just focusing on the Canadian market. We will happily look at international markets once we have fully satisfied what we've got in Canada. But as the premium player here with an 8% market share that we think we can grow dramatically, there is so much opportunity in Canada. We're focused on that. And I think that's one of the problems with the cannabis industry is there's too much fluff and not enough actual real execution. We're going to be selling great product. We're going to be making money in Canada. And then we'll take the business and we'll go where there's opportunities. But right now, if we put our head down and we actually grow great product and sell it into the Canadian market, we're going to be great.
Fantastic. Well, thank you so much, Adam, Cody, and Stuart. Great presentation. And we really look forward to your future updates.
Thank you very much for the time, guys. Appreciate it, Anna. Thanks so much.
All right, everyone. It's been a great morning so far. We've got more presentations coming. We are going to take a quick break. We'll be back in about 20 minutes. You are going to experience a black screen for a brief moment. Remember that. So before our next presentation, sometimes you might need to click the play button to launch the live presentation if you're on an Apple device. Otherwise, we're going to take a quick break and we'll be right back. Thanks for watching.